Hi, I'm Martin Pring. They say that a picture is worth 1,000 words, but I say that a chart is worth 1,000 pictures. And that's because charts in the financial markets often scream out very important messages that an important or significant trend reversal has taken place or is about to take place. Each month I publish a newsletter called the Intermarket Review, and each issue contains what I call the chart of the month. And that features a market that I think has just turned or is about to turn. So this series of videos aims at presenting these charts of the month. So if you're interested in them, please hit the subscribe button and you'll be brought up to speed on a regular basis. So without more ado, let's go to the chart room and see what's in store this month. In early December, Pring Capital Group put out an expanded report entitled, "Are You Ready for Another Lost Decade?" In this presentation we make the case that the lost decade, in which the S&P was underwater for anyone who had bought and held, will likely extend well into a second lost decade. Previous secular bear markets in the US have lasted on average 18.6 years, and the current one began in 2000 and has only been running for 9 years. One interesting observation is that the Nikkei in Japan peaked in 1990 and has been in a downtrend ever since. Since the Japanese market is 10 years ahead of the US in that dubious respect, it seemed like a good idea to overlay the US over the Nikkei. That's what we see here. The Japanese market starts in 1990 and is in blue and takes us up to the end of November 2009. The green line for the S&P starts in the year 2000. It also takes us up to November 2009. If you do not think these series reflect the Nikkei and the S&P exactly, you're absolutely correct, because both indexes have been deflated by their respective CPIs. It's no good owning stocks if they appreciate 25%, but if inflation is at 30%, because the stocks will lose their purchasing power. And don't forget, you'll be paying taxes on that so-called 25% gain, so you'll be even worse off. As I said earlier, secular bear markets in the US since 1901 have averaged around 18.6 years, and the current one for Japan will enter its 21st year in January. The 82% drop in Japanese inflation-adjusted prices compares to the average 66% decline in the US. That suggests that the Japanese market may be ready to experience a secular bull. I find it remarkable that the two markets, with this 10-year lag, have been acting fairly consistently with each other. Here's the 1990-1992 bear for Japan and the 2000-2002 bear for the US. The subsequent waves were actually quite similar in the next few years, but not their magnitude. Then we see both markets decline in concert and experience primary bear market lows within a few months of each other. Currently, the US market is in a primary bull trend, but if it follows the Japanese leadership, we should expect to see a peak sometime next year, say July. And that's not a prediction, by the way. If it turns out to be roughly correct, and the US follows the Japanese pattern, we would expect to see another major decline into the year 2013. This certainly doesn't sound very appealing, and it's not. But remember, the first year of the new decade is often a weak one. The opening years of the last 12 decades have only seen equity prices rise 4 times. 3 of the 4, 1900, 1970, and 1980, each experienced sharp setbacks in the first half of the year. That leaves 1950 as the only unscathed up year. Here's the 1970 decline, for instance, where prices chopped off 20% of their value between January and May. And here's the 1980 example, where we saw a 15% decline in the first quarter. The lesson, quite clearly, is that the opening year of the decade is usually quite challenging. Clearly, there's need for caution going into the year 2010. Now, if you're interested in that report that I cited earlier, please go to pringturner.com, where the report is linked to the home page. If you enjoyed this chart of the month, you may want to go to Pring.com and download a free sample of our intermarket review. A monthly roundup of the world's principal financial markets with a special emphasis on the US. We also look at global indicators, bonds, precious metals, currencies and international markets using ETFs to execute our strategies as much as possible. You'll find unique indicators and intermarket relationships you cannot find anywhere else. In the meantime, thanks for watching and good luck and good charting.